Hello, this is Richard Pears from Finextra TV, and I'm very delighted today to be joined by lots of eminent colleagues from the US. Today, we're going to talk about a report that's come out, which is managing climate risk in the US financial system. And it's come from the Commodities and Future Trade Commission, and I'm joined by Commissioner Russ Benham. Russ, give us a smile so we know who you are. Dave Jones from the Nature Conservancy, Truman Seaman from OS Climate, and Mindy Luber, who's the president at Ceres. So thank you so much for you sparing your time to discuss this with us today. Can I just ask perhaps a little brief introduction from each of you, so we know where you're coming at from this, and then I'll come back to you and ask you the nature of the report. Can I start, Mindy, with you first of all, and your kind of background and role in this?
Sure, absolutely. Well, the commissioner, Russ Benham, who's going to talk in a minute, had the vision and the foresight to say, in his role as commissioner of this Commodities Future Trading Commission, the impacts of climate risk to the economy overall as a systemic fundamental risk needed to be explored. So my background or my involvement was I was lucky enough to be chosen as one of the members of his commission, 34 members from very different backgrounds, who came together and landed on something the commissioner demanded of us, and I thought he was never going to get, despite the fact that I wanted to help him get there, which was a unanimous report. So not only a fundamentally important report about economic systems and what climate risk means to it, but to get a report that was both substantive, clear in the facts and recommendations, and supported with unanimity by 34 very different players. So being part of the commission was a privilege, and I think we've got a lot of work to do to take those recommendations and make them the reality.
And Commissioner, thank you for that. Mindy, Commissioner, tell us a bit about yourself, but also it's a global audience, and surprisingly, not everybody may know who the CFTC is. And tell us a little bit about just who they are and how they fit within the pantheon of US financial services industry.
Sure. Thanks, Richard. It's great to be here, and thanks, Mindy, for those comments. The CFTC, like you said, is the Commodity Futures Trading Commission. We're the primary derivatives regulator in the United States. It's pretty unusual. Most market regulators across the globe combine the securities markets with the derivatives markets, but the CFTC has a rich history in agriculture, and at one point was actually housed within the United States Department of Agriculture. Obviously a huge market, very important one, and it's a significant market to the US with agricultural products, energy products, financial products, whether they're interest rate or currency. And one thing that I often say about the CFTC that I think is very unique and very cool is that we have a broad constituency. So anything from an agricultural cooperative to the most sophisticated institutional investors and banks, to manufacturers and commercial producers who need to hedge any number of risks. So we manage risk. We are an agency that focuses on price discovery and risk management across the board. And for those reasons, many of which Mindy pointed to, I thought it was important that the CFTC and within my capacity as a commissioner, sort of create a vision for starting to think about climate-related financial market risk. And within the context of an advisory committee, I was very fortunate to meet these three individuals and others, 31 others, including the chairman, Bob Litterman, and put together really an exceptional committee of experts from across the economy, from banks, institutional investors, agriculture, energy, academics, nonprofits, environmentalists, you name it, and really put together a balanced, diverse coalition of market participants and stakeholders to start talking about climate risk and ultimately provide policy recommendations that hopefully US regulators and I hope others across the globe will benefit from, so that we can really start addressing these systemic issues, both systemic, of course, and subsystemic, as we're unfortunately dealing with in the US right now, before it's too late.
Fantastic. Well, thank you so much that you've taken that initiative. Dave, you're with the Nature Conservancy organization. Please tell us a little bit about your role in this and your background.
Thanks, and it's a treat to get to join colleagues on this webinar. So I'm the Senior Director for Environmental Risk at the Nature Conservancy. The Nature Conservancy is a global conservation organization dedicated to protecting the lands, waters, and oceans on which we all rely. And one of our highest priorities is tackling climate change. And we've done a lot of pioneering work about the role that nature can play in mitigating climate change as well as adapting to climate change, including more regenerative ag practices that retain carbon in the soil, reforestation or prevention of deforestation, the importance of mangrove forests and salt marshes and other natural infrastructure in sequestering carbon, but also in providing risk reduction benefits to physical assets. At the same time, I also, not at the same time, but previously I served for 8 years as California's insurance commissioner regulating the largest insurance market in the United States. And in that role, had the opportunity to do some pioneering work around getting the insurance sector to begin addressing climate risks, including requiring them to disclose their investments in coal, oil, gas, and utilities that rely on coal, oil, and gas, so that I, as a regulator, would have better insights into the sorts of risks they might be facing in investing in those assets, as well as looking at the underwriting side at their portfolios and the sorts of risks those face as well. So was delighted to be invited to join the commission. As Mindy and the commissioner said, it was an extraordinary effort and task that the commissioner set for us, and we have come up with a very robust set of consensus recommendations that are really a roadmap for U.S. financial regulators as to what they should be doing to address climate risk to the U.S. financial system.
Dave, thank you. Truman, we've had a recent interview with you on Finextra, but please do refresh our followers on your background and role in this.
And thanks very much for having me as well. I'm really also grateful to have gotten the chance to participate on behalf of OS Climate in this committee. And so I won't spend the time here on the background leading up to that, except to say that back in the way back during the Clinton administration, I was the lead on financial mechanisms for the U.S. climate negotiating team, and so that among other things, and having also advised as a strategy consultant the CEOs of some of the largest corporations in the U.S. across many different sectors on integrating climate into corporate strategy and capital investment, R&D, et cetera. That's part of what we brought to the table. But also, I think, if there's a name for the seat that we, or the role that we played on the committee, it was bringing some deep expertise around data and analytics.
Fantastic. Well, we'll come back to that, I think. Commissioner, I wanted to go to you next in terms of, the world outside looks at the US perhaps as moving, away from some of the agreements that have happened around climate change, knowing that there's a lot of regulation already in place in the US financial services industry. What will this do? What will your activities do to sort of move the agenda forward into action so that we can really address this climate emergency, in your opinion?
So the fact of the matter is that, to your point, there's not much going on right now, especially in the policymaking space. What this committee proved in many respects is that our market's stakeholders are very much thinking about this. They're very much, if not ahead of the curve, with many of the global initiatives and efforts that have been going on. And now, my goal is, obviously, this has been a years-long process, getting the committee together through a pandemic, through differences and difficulties, really remarkable effort by 34 individuals to come together with consensus, to Mindy's point, unanimously agree on recommendations. It's now about raising awareness. It's now about advocacy. It's now about having dialogues both in the public space and, in bilateral meetings, for me specifically with my colleagues in DC, to start to really express and advocate for what concerns and what issues market participants and stakeholders across the board. And, to my point earlier, the number one goal I had, among others, especially getting the report done, was bringing together a diverse coalition, being able to tell a story. Getting policy done is all about having diverse coalitions, being able to say that this group of individuals and institutions that really represent nearly every facet of our economy agree on these policy ideas is quite unimaginable, really. And it's a huge effort, and it's a huge success. And I think that really will springboard this effort writ large, and the sort of advocacy that needs to happen. With regards to the sort of part of your question about regulation and folks concerned about too much regulation, we need to rethink regulation with respect to climate risk. Much of our regulation is decades old. We learned that in the financial crisis, where we had a nearly 100-year-old financial regulatory system that just did not work well with the current financial markets itself. And I think we're starting to see that with climate risk as well, whether it's to Truman's point about scenario analysis and different stress tests under different climate scenarios, whether it's disclosures and what constitutes materiality. We need to have short, midterm, and long-term risk analysis that really starts to think about climate risk specifically and not just risk writ large, so that we can have a better sense of what risks are out there and what institutions need to do, what regulators need to do, and what information needs to be shared between investors, regulators, and institutions so that we can address these risks immediately.
Fantastic. So clearly a super important report. I mean, I think that's been made very clear. Let's get into a bit more what is in the report. Truman, I think you might be able to give us sort of a few headlines which we can then discuss. Truman.
Sure, Richard. So as one, and I think the report opens up with one sort of a capstone recommendation, and that is that it's absolutely crucial that the U.S. establish a price on carbon, that it's fair, economy-wide, and effective. And effective essentially means high enough to send a signal that shifts the way capital is allocated in the economy and risk is managed. And I think it's notable that right on the heels of this recommendation, that the Business Roundtable came out and called for that as well. So one of the most powerful voices getting a consensus position on something as sweeping as that in the BRT, I think shows the urgency that all are feeling, and the importance of not a patchwork, but an economy-wide U.S. approach. So that was one. Another is that regulators need to require banks and non-bank financial institutions to address and manage climate-related risk. That regulators also need to undertake and assist financial institutions in their own risk stress testing, to Russ's point earlier, that to address investor concerns about ambiguity, that regulators should clarify the definition of materiality for disclosing medium long-term risks, and Mindy is really expert in that area, can talk further about it. That regulators should require listed companies to disclose their scope 1 and 2 emissions, and as soon as consistent methodologies are available, also their scope 3 financed emissions and other scope 3 emissions. That regulators should support a range of platforms for climate-related data and analysis, including open source as well as proprietary platforms. Two more, and then we can get to discussing them. This is really important, that regulators and policymakers need to prescribe a consistent and common set of broad risk scenarios, guidelines, and specific assumptions, so that there's apples to apples comparison that's available for this risk management purposes. And then lastly, and I mean maybe given especially the Finextra audience, important here is that it's not the U.S. isn't going about this alone, that we should join as full members in international financial regulatory bodies that are addressing climate risks, including the Network for the Greening of the Financial System, a network of central banks, NGFS, and other major fora. So those are, I don't know whether others want to call out any particular recommendations.
Mindy, perhaps if I go to you on materiality, just as Truman had mentioned, that's an area that you like to focus on. Can you help us a little bit understand what you were shooting for with that one?
Sure. Let me start with big picture, and I'll come back to materiality quite specifically. If the COVID crisis that we're all living with right now taught us anything, it's that it creates a systemic risk to all parts of society, to our humanity, our public health, the health and safety of our families, and our economy. And we're watching the huge implications that are causing us having to spend trillions, not billions, but trillions of dollars on how to rebuild our economy and our societies. Climate change has the potential and is starting to have the reality of that kind of systemic risk that's across the marketplace. And the importance of this report is looking at climate in that kind of systemic fashion. Don't think about it as an environmental issue, as a planetary issue. It is an issue that runs to the systemic well-being of our economy. And I believe this Commission report, more than almost anything, showed that and said it well. And then it needs to be translated into our market systems. So starting with transparency, analysis and transparency. In the United States, we have a Securities and Exchange Commission that basically is responsible for making sure companies disclose material risk, major risks to their company, the economy. Climate risk, now that it's defined as a systemic major risk, or in financial terms, a material risk, needs to be part of that. So financial filings need to not only talk about currency risk and trade risk and inflation risk, but climate risk, because it is material, it does matter, and that disclosure needs to be consistent, it needs to be mandatory, and it needs to happen. And there are many places in the United States, in the world, that are already doing it. The United States needs to catch up. Frankly, we don't need new laws. We just need to execute and implement regulatory changes, some of which are even on the books, but not being enforced against. So time to be honest and clear about what data is important, get it filed and available to everybody who needs that data, and it will change decision-making, because we've got a lot of smart people in the financial world, but they can only make smart decisions if they have consistent, comprehensive data.
Thank you, Mindy. So, I mean, let's go to data. So, physical risk, transition risk, the cry from the practitioners is we don't have the data. We haven't got it. We don't know where to get it from. We can't give what the regulators are asking for. Truman, Dave, do you want to sort of give us your perspective on that? Truman, let me throw it to you first of all.
So certainly the report recommends that there needs to be more attention paid to the development of data, more disclosure, so that financial institutions and regulators behind them have better information on which to make decisions about climate risk to financial institutions and to markets. But having said that, I think we have to be careful that the perfect not be the enemy of the good. There is already sufficient data available, and financial institutions are using it in various ways to begin to look at these risks.
It's also very much about opportunities and the importance of investing. So investing and financing climate solutions, resiliency, and just transition is part of risk management. It's inherently part of that, and that includes after any crisis of this type, a tremendous amount of investment that's happening that's going to shape the economy for decades to come through the reconstruction. And there too is an important opportunity to enhance risk management by addressing some of these transition issues and hopefully for further baking in some aspects of the economy that are creating economic risk.
Yeah. Richard, I just want to build on something my colleague said. First of all, let's not wait for the perfect data. Let's not make perfect the enemy of the good. There's good data out there. Yes, there's more that we could have. Number two, we just need to open our eyes and look around. We know data is for certain parts of the puzzle of what we're doing. But if we just look at the United States, with very similar things happening around the globe, the western part of our country is on fire. We have never seen an example of the magnitude, the reach, the stress of the fires in California, Oregon, and Washington State. People's lives are being ruined, businesses are being ruined, unprecedented and getting worse. The hurricanes that are hitting literally as we are speaking, the southern part of our country, that will create billions and billions of dollars of risk and real costs. And part of the reason this discussion is making so much progress and the report is resonating so well is I think we're finally coming to grips with just turning on our television and seeing what people are doing and what they're living. We have got to act on this with or without the perfect data, with or without the perfect definitions. It is time to act because the subprime meltdown of the late 2000s will look small by comparison to what climate change will do, not only to our economic well-being, but to our communities, our people, and our planet.
Yeah, well said, Midi. Let's finish with, that's almost a great point to leave it, but let's finish with a quick round robin on what next, how can people get involved, what do you see, the next step that we should be looking out for? Commissioner, perhaps starting with you.
I am a financial regulator. I have to think about risk to the financial system. I have to think about past risk, present risk, and then most importantly, future risk. And in order to do that, I have to sell a story in many respects, but I have to use data. I have to use consensus. I have to use my experience as a regulator to be able to advocate and make an argument that this is a real challenge. And again, to Mindy's point, I'm in the mid-Atlantic on the East Coast of the U.S. and for the past few days, I've woken up to a light layer of smog, and I've been told that's just smoke blowing over from the West Coast, which is unimaginable, 3,000 miles. And that's not bad for me to think about what folks are dealing with and the sort of the dislocations that are going to happen in communities all across the country and the compounding effects of the hurricane. So we've got to address these issues. We have to work on them collectively and address them as soon as possible. And I'm going to do whatever I can to sort of, again, advocate the work of this committee and talk with my colleagues, and hopefully the conversation will move forward quickly. But then again, to Truman's point, use these lessons as opportunities, let the investment community, free flow of capital sort of move in the right directions when we create better incentives to address the climate crisis.
Thank you. Dave.
So I think it's important to underscore what a tremendous accomplishment this is, and what Commissioner Benham has accomplished in pulling together a cross-section of representatives of the financial sector and the real economy and civil society groups, and come up with a unanimous supported report which makes strong recommendations to financial regulators. This is a roadmap, and it really is and should be required reading for every U.S. financial regulator. If I can be so bold, I think it would be financial regulatory malpractice for U.S. financial regulators not to take up the recommendations in this report. And so I think that, from my vantage point, the next step is, importantly so, making sure that this report is front and center for U.S. financial regulators, the Federal Reserve, the SEC, the Office of Comptroller of Currency, the credit union regulators, state insurance regulators, you just go down the list, and that it be considered and taken up. And I think that what's important about this also is that you have financial institutions supporting these recommendations and saying to their regulators, look, we need your help here in addressing this emerging risk, and together we can come up with a set of approaches to make sure that these risks are considered, that they're addressed, and that financial markets operate as they should by allocating capital towards particular parts of the economy that don't face these risks and that can help mitigate these risks. So I'm tremendously excited. And again, I want to congratulate Commissioner Benham for his leadership and his vision in pulling this group together. And I think we're going to see uptake of these recommendations by U.S. financial regulators, and importantly so.
Thank you. Truman, we have a pretty technical audience, people that want to get their hands on building the solutions to this regulatory and planetary issues that have been highlighted. What would you say to us are the next steps?
One is to the extent that it kind of fits what they're doing. Wanted to highlight work that the Linux Foundation is doing in bringing the collaborative open source approach that has been such a tremendous breakthrough in not only operating systems, but the Human Genome Project and developing vaccines to pandemics, to to this area of risk management and finding opportunities, and part of that is launching an initiative together with Allianz, who is also participating in the committee as a member, Microsoft, Amazon, S&P Global, who is also a member of the committee, in pressing forward and implementing the recommendations in the report around data and analytics. And there's a great opportunity here to really bring the power of the financial data community and the technology community to address the needs here, and build on the great work of PACTA with sort of next generation tools that are able to really fit right into investment processes.
Mindy, I'll leave the last word with you.
So every single person should be talking to their member of Congress or Parliament and say, just as a base issue, as an economic imperative and moral imperative and environmental imperative, let's get a price on carbon. It costs society money. The people who create that problem and that cost to society ought to pay for it. And my point there is a role for everybody. Yes, some of the details of data or the Commodities Future Trading Commission that everybody doesn't know the inside and outside of, that's the case. But there is much that every one of us as citizens can be doing and should be doing and flow directly from the Commission report. We're 34 players, completely different backgrounds, oil companies and banks and NGOs, called for a price on carbon.
Absolutely. Well, wonderful. Thank you so much, everybody, for joining me and unpacking the report and making how clear and important it is. So thank you for your time, and good luck. And if we can help in any way over this side of the pond, please let us know.
Thanks so much, Richard.
Thank you.